Gold smashed 4621 exactly as we predicted in our last week analysis video, and it's now consolidating within a range. But listen closely. We have officially entered the danger zone, and if you think this move is over, you could be about to make a critical trading mistake. In our midweek analysis, we also highlighted the potential for a correction and identified key support zones. So before we move forward, let's take a quick recap. So currently gold is at Fib extension 100%. That is the price level of 4623. So in my weekly video, I've mentioned the target of 4621 to 4628, and we have achieved that target. And currently gold is hovering, basically not moving down. It's just hovering, means consolidating around this Fib resistance level. And in case if we see some drop, it might go back to the previous Fib extension level of 0.618, that is 4550, and then continuation higher. This is how technical analysis works. And this week, the market has serious fuel. We have US President Trump speaking on Wednesday, the 21st, alongside the Bank of Japan interest rate decision. On top of that, we are getting GDP and PCE inflation data from US and CPI inflation reports from the Eurozone and UK. This lineup has the power to move markets aggressively. So in this video, I'll break down the key levels and technical outlook for the US dollar, CADCHF, Euro US dollar, Ethereum, US dollar Japanese yen, and gold. So let's get into the analysis now. So let's begin with our chart analysis. Now today, before I start with my charts, I want to introduce FX Labs Prime. So it's my in-house development. So my IT team has developed a portal. And on FX Labs Prime, we have multiple tools here. So we have lot size calculator for Forex, commodities, and crypto. We have Forex market time zone converter as per your local time. And we also have quantum analysis. And we have multiple analysis tools as well. So you will get to see currency strength meter on FX Labs Prime. So when you maximize the screen, you will see the heat map, currency heat map for different time frames here. And you also get to see trending pairs. We have RSI tracker here, and we also have AI news analysis. So basically, when you get your email registered with us and you subscribe to fxlabsprime.com, you will start getting the notification as per your desire. You will see the news analysis notification immediately prior to any important event in the Forex market. You will see RSI tracking. So basically, you will get RSI notification to your mailbox whenever any instrument enters into overbought or oversold territory based on your desired time frame. And plus, you also get to see trending pairs of the day. So I'll take you to tools now. Now today I have selected the currency pairs on the basis of quantum analysis. I'll come back to FX Labs Prime. So first thing, we need to go through the dollar index chart. I'll remove my existing drawings. I'll turn it into a line chart, and I'll start from weekly frame here. Now on the basis of weekly frame, the structure has now entered into the corrective move up. So after dropping, so basically we got the drop here. So this is the first drop, then we got the corrective bounce, and then this is the new downward leg. Now the next downward leg lost bearish momentum here, and now it is creating a short time bullish structure. Now this could be short-lived because this is corrective move. So we have multiple options here. I'm going to zoom in, and I'm going to put a vertical line at the lowest point here. So this is the recent low, and we can apply Fib retracement on the previous move down. So starting from the highest, I'm connecting to the local low here, and I can see here that dollar index has started creating higher lows and higher highs here. And on the basis of MACD histogram, the momentum was increasing in tandem with price, and now histogram is again moving upward. So basically, based on the weekly chart, we are expecting short-term bounce in US dollar. Now we can apply Fib extension on the lower time frame, that is daily. So I move down to the daily frame. And I will apply my first Fib extension from the second low, since it has created equal lows here with bullish divergence. So we get to see here lower low formation here. Sorry, wrong tool. So I'll mark a line here. So we get to see a lower low formation with bullish divergence, and this is the breakout structure level. So the breakout structure was achieved, and then we got the corrective drop down. So we can start our Fib extension from the second low as point A. This is to be taken as point B, and this low is to be taken as point C here. So I'm connecting with Fib extension now. So I've applied my first Fib extension in the bullish direction, and it's time to bring the vertical line on point C here. So now we will break it, and now we will break the last leg up into the smaller time frame. So basically 4-hourly frame. Now starting from the vertical line again, I can see here new bullish divergence. So this is again a lower low formation, which comes with bullish divergence, and I get to see here breakout structure, and right now it is printing a sequence of higher lows again. So I need to apply my first extension on the 4-hourly frame. So let's apply our first extension on the 4-hourly frame, and I'm connecting the A, B, and C on 4H now, and we can shift the vertical line to point C here. Now we need to look for duplication of Fib lines. So I have found a level which is the exact duplication here. So this is the level where the retracement line and the extension line, they are overlapping, and the price level is 99.80. So currently US dollar index is at 99.20, and I can see that it can move up to 99.80. So we are expecting a short-term bullish move. Now once it hits 99.80, either it will change the direction and it will start its next leg down, or if it doesn't start its new leg down, there could be short-lived drop and it may continue higher to the next extension level. So we need to zoom out, or we can switch to daily chart and we can find the magnet zones here. I need to reset the view here on the daily chart, and I'm going to zoom out, and I can see if it doesn't stop around 99.80 or the range between 99.8 to 100, and if it clears the resistance at this level, then dollar index may continue to the next magnet resistance around 101.54 to 101.66. Now this is short term, and after completing the corrective bounce up, I'm expecting continuation in the downward direction, either from the first magnet resistance or from the second one. Now I'll be switching to the next lower time frame, that is 1H. Need to reset the view again one more time, and I need to start from the vertical line on the 1-hourly frame. So on the 1-hourly frame, this is the point A, this becomes your point B, and this becomes your point C now. So let's apply the next extension. And done. We can change the Fib extension to blue, and we can move the vertical line to point C here. Now starting from the vertical line, it is still creating a higher low and higher high pattern, and I do not see any signs against, because between the last two highs, so we get to see higher high sequence here, and I get to see higher high sequence on MACD histogram and higher high sequence on MACD lines. So I'm expecting after this corrective drop, dollar index will continue higher and it will touch 99.80 or 101.5. So short-term bullish expectation. Now I'm going to the next instrument, that is CAD against Swiss franc, CADCHF. I'll take you to 3-monthly chart. Now before I'll analyze the chart here, I'll move back to the FX Labs. So here in quantum analysis, you have the list of instruments, list of currency pairs. Now I'm going to select CADCHF here. And once selected, we have two options. So either we can see intraday view here, means short-term setup, or we can switch to swing trader, which would be our higher time frame setup. Now, based on intraday and swing trading analysis, the expectation is bullish here. So I can see the score is in favor of buyers. So it gives me a 60% buy probability. Now, this is quantum analysis, which is based on the, you can say, weighted score of multiple indicators here. I'm not saying that we are just blindly following the indicator or the trend meter score here. Our final validation comes from the chart analysis. So swing trading shows bullish behavior here for CADCHF. And when I move to intraday, again, I can see the probability is in favor of buyers again. So the long term means higher time frame setup and the lower time frame setup, they both are aligned in the bullish direction as per FX Labs. Now we need to move to the chart and look for the validation. So this is the final answer. So chart analysis is the final answer. I'm not saying that you should blindly trade on the basis of quantum analysis. So quantum analysis, it only helps to pick the trending pairs. Now, the first move is the bearish move. So this is the big drop. Then we got the corrective bounce up. So basically, we can apply extension in the downward direction. I've purposely taken 3 monthly chart to look at the long-term trend here. So this is the first move down. So basically, A, B, and C connected in the bearish direction. So let's change the fib extension to red here. And now I'm going to connect to the next move down. So this becomes point A for the next move. This becomes your point B. And this is our point C here. So let's apply the next extension in the downward direction. So A to B for the second wave and B to C connected again. And I can see more waves in the downward direction. So if you want, we can apply a vertical line at point C. And after the vertical line, we have the next wave down, A, B, and C again. So it gives the opportunity to apply one more extension in the downward direction. Applied. And we can shift the vertical line to the next point C. And right now, we are exactly on the fib extension support level. So I get to see a magnet zone here. So the zone between extension 1 and 2, so 100 and 200. So it has entered into the magnet zone. And I can see weakness here because between the last two lows, the bearish momentum is now fading out. So this is the previous low and this is the new low. Yes, the divergence is anticipated here. It is not yet completed. But I can see that the histogram has changed from deep red to pink, which means the bearish momentum has started slowing down. Now we can shift to monthly frame. And on the monthly frame, starting from the vertical line, we can add more extension levels. So this is the first extension in the downward direction on the monthly frame. We can use a different extension color here. And now we can connect from point C. And I'm taking the next wave down. I'm skipping the first wave. I'm picking the next wave because the chart would be cluttered otherwise. So I get to see a new wave down and I can add a vertical line here and we can zoom in now. So starting from the vertical line, we have one more wave. So point A to B connected and point B to C connected here. And we can shift the vertical line to the new C point here. So this is the last leg down, which can be broken into sub waves. So here I'm going to connect one more time. So this is A and this pullback is associated with this high. So this becomes point C and this is the next wave. So I'm going to apply one more extension in the downward direction. And done. And we can now shift the vertical line to the closest swing high on the monthly chart. Now it's time to move to the next lower time frame and similar picture here. I can see slowdown in bearish momentum and a bullish divergence is highly anticipated to be completed in coming days. Now let's switch to weekly and let's analyze from the vertical line. So from the vertical line, if I start reading the chart, so I can see a sequence of lower highs and lower lows. And between the last two lows, the bullish divergence is completed. So it is a lower low pattern and NPN bullish divergence is completed. So when the divergence is visible, completed, we need to apply the break of structure line. So BOS applied. So buyers, they have not yet completed the formality of breaking the structure here, but we can use our trend line validation. So I'll start from the vertical point high and I'll connect with the BOS point. And yes, the trend line is compromised, which means the bearish trend is gone on the basis of trend line breach. And this currency pair has officially entered into a bullish setup on the weekly frame. Now I'm switching to daily chart and I'll start reading the chart from the lowest point now. So the lowest point needs to be identified and we need to apply a vertical line. Done. And I'm counting the bullish waves now. So here we have point A, starting point for buyers. We have point B and we have point C here. And we get to see a new wave after that. A new high is printed. So basically a higher high pattern. So this completes higher high sequence. We have higher high sequence on MACD lines and we have higher high sequence on MACD histogram. So which means no damage to the bullish structure and the buyers will continue. And we can apply our first extension now in the bullish direction. So first extension in the bullish direction applied and it's time to shift your vertical line to point C. So basically market has touched exactly extension level of 161 and the corrective drop has started now. And in order to check the percentage of retracement, we can apply here fib retracement on the new wave. So this becomes my A point and this becomes our B point. So let's apply fib retracement on this leg. So fib retracement applied and right now this currency pair is trading below the strong resistance zone of 14.5 to 23.5. And the strong support zone is in between 78 to 85. So the highlighted green band is the strong support zone and the highlighted pink band is the strong resistance zone. And I can see that histogram has started shifting in favor of buyers now. So we can expect continuation here. Now it's time to switch to the new lower time frame, that is 4H. And on the 4-hourly frame, I can see here during the downward corrective drop, this is the first move down, pull back into the strong resistance band and the next move down. So this gives me L1, first low is printed here and this is your second low and I can see a lower low sequence here. And the lower low sequence comes with bullish divergence on MACD lines. So in case if you want to buy here and you want to join the buyers, we need to apply the break of structure on the last bullish divergence. So the new break of structure on the last bullish divergence is here, which is pending. But in terms of trend line, the bearish trend line is again compromised. So we can expect continuation in the upward direction here. So I can add one more extension here. So this is point A, highest to be taken as point B, and this is the end of selling. So this is point C, and I'm going to apply the next extension here. So the next extension applied, and we can use a different color here for the new extension line, and we can shift the vertical line to point C here. So this will create new magnets now. So we need to zoom out and look for the new magnets. And yes, the first magnet resistance level is 0.5868. So current price is 5767. If it moves to the next magnet, it has the potential to give you a 100 pip move in the coming week. And when you switch to 1-hourly chart, you can see the bullish structure is established. So it is creating the sequence of higher lows in conjunction with higher highs. And any drop should be taken as an opportunity to buy here. And the level of invalidation is already highlighted on the higher time frame. Let's move back to the daily chart. And unless CADCHF remains above 0.5673, any drop will be taken as an invitation to buy. And your first magnet target would be 0.5868, followed by 0.5948. Now I'll switch to Ethereum. Now again, I'll move to FX Labs Prime to check the quantum analysis for Ethereum. So I'll select ETH US dollar, swing trader. So the score is again in favor of buyers here. So it shows 73% probability in the buy direction. And when I switch to intraday, 69% probability in the buy direction. So again, higher time frame and lower time frame, they are synchronized in the bullish direction. So I need to clean up the chart and I need to move up to monthly frame here. So based on the monthly frame, the structure is bullish. So this is the lowest point. Then I get to see higher low, then the next higher low, and I can see here a higher high sequence as well. And we can apply Fib extension multiple times in the bullish direction. So I'm going to connect the extension I'll start from the lowest to the first swing high and connect with point C here. And we can bring a vertical line. And the next extension will be from the vertical line. So this becomes your new A. This becomes your point B. And this is point C here. And we can apply the new vertical line on the second higher low. So it extended, it reached exactly to 4502 and dropped. So this is the corrective drop right now. I'm switching to weekly frame now. Now on the weekly frame, there is no bearish divergence. So between the last two highs, I can see higher high sequence. It's a higher high pattern. I get to see higher high pattern on MACD histogram, and I get to see higher high pattern on MACD lines. So which means that Ethereum should continue in the bullish direction after the correction is completed. So in order to check the retracement level, we will apply Fib retracement on the last bullish leg of the weekly chart. So this is the starting point A and this is the ending point B, and I'm going to connect with Fib retracement here. Applied. So it dropped precisely to 61.8, and we can expect a resumption of bullish trend from this level. Worst case scenario, the zone between 78 to 85 is the last resort for buyers. So unless Ethereum remains above 2030, the long-term view is bullish. So assuming that the correction is over, so I cannot assume on weekly basis because the histogram has not yet changed to bullish now. So I need to move down to daily here, and I will start from the vertical line on the daily chart. So starting from the vertical line, I'm going to connect point A. The highest point is to be taken as point B, and this is to be taken as point C. So let's apply the next extension now. So I'm going to connect A to B and B to C here. I'm going to change the extension color to green, and we can shift the vertical line to point C here. And we need to zoom out and look for magnets. So this becomes a strong magnet support at 2752. So this is the local support I'm talking about. The current bounce started from this level, and I need to zoom out and look for the next magnet. So the next magnet is the confluence of two Fib lines exactly at 6193. So 6171, 6193, basically 6200 is the next target I'm looking for. Now I will not dive down to the lower time frame because for crypto market, I usually do not trade on short-term basis. I accumulate my orders, my positions, and I hold them for long term. So let's evaluate our risk and reward. So based on your current level, if you enter into a buy trade, and if you protect your trade with the stop loss below 2000, because this is the last resort for buyers, and if you hold it for the target of 6200 or 6193, the risk and reward is amazing. It's 1.9, almost double of the risk you are willing to take. So Ethereum remains long-term bullish, and I'll be accumulating buy orders. The next instrument is EURUSD. Now, since dollar index is bouncing higher for the short-term correction, so Euro has come under bearish pressure, and we can validate with the help of quantum analysis. So I'll select EURUSD from the list. And if you notice, the intraday score is in favor of sellers, so 72% probability here. So right now, EURUSD selected, intraday. And the intraday trend meter is leaning in favor of sellers, so 72% sell probability. If I move to swing trader, the probability is even stronger. So it is strong sell, and the trend meter says 76% probability. So higher time frame setup and lower time frame setup for the timing is aligned in the favor of sellers. So let's start from the monthly frame. Now on the basis of monthly frame, I get to see here bullish divergence. So this is the double bottom low here, and this is the new low, and I get to see lower low formation, and the lower low formation comes with bullish divergence on MACD lines. So on the basis of divergence, we need to apply the break of structure level. So the break of structure is the highest point between the two lows. So it has not yet broken the bearish structure, but we can validate with the help of trend line as well. So for trend line validation, I will connect from the highest point and I will connect diagonally with the BOS point. So let's apply the trend line here. And trend line applied, and the current price is higher than the falling trend line. It means the falling trend line was breached and compromised. So buyers, they broke the falling trend line, they made the perfect retest, and now it has bounced strongly. So this is the bullish structure on the monthly chart, and we can also apply first fib extension in the bullish direction. So I will start from the lowest point as point A. This is your point B, and this is to be taken as point C. So let's apply. So ABC extension applied, and currently euro dollar is hovering at fib extension 100 mark. So it touched exactly fib extension 100, and now it's hovering here. So basically it entered into the consolidation mode, and the bullish momentum is now fading out. Now I'll be switching, so I can add the vertical line, and then I'll be switching to the lower time frame. So this is point C, so we need to add a vertical line here, and now I'm moving to weekly chart. So the weekly chart starts from the vertical line. So we have established point A here, and we have established double top here, and the histogram has changed to negative. So basically buyers, they have given up here. So we can expect short-term correction, and in order to measure the correction, we will apply fib retracement from the lowest to the highest. Now the correction has started, but it has not entered into a deeper corrective mode. So currently it is still trading above fib retracement 23.6. So unless retracement 23.6 level is breached, I will not talk about the next level. So this is the first target in sight, and the momentum is right now in favor of sellers. Now, since the chart has entered into the bearish pattern or the short-term corrective pattern, I'll switch to daily, and I'll try to find the bearish divergence here. And yes, it is clearly visible. So during the bullish rally, we got to see higher high sequence, and this comes with bearish divergence on MACD lines. And the middle point low is here. So this is again overlapping with the 23.6 fib retracement zone. So this is going to be the break of structure level. Now the break of structure is pending, but the rising trend line is compromised. So here we need to connect from the vertical point. So lowest point A, and we need to connect diagonally with the BOS point. Let's apply. So the rising trend line is breached. So we need to see the trigger point of sellers. So the vertical line should be shifted to the highest point here. Now starting from the highest point, I'm looking for the bearish extensions now. So this becomes the high point A, and this is the end of first corrective wave down, and this becomes your point C. So let's connect with ABC in the downward direction. So here we go and connect A to B, and we connect point B to point C. And I'll be changing the fib extension color to red here. So the first target for Euro USD is 0.618 extension level. In terms of price, it is again creating a very strong magnet zone, and it is 1.1557. In case if sellers, they want to continue below this level, they could also extend towards the BOS level, which is again fib extension 100, a very strong zone. And below 1557, Euro USD is expected to hit 1.1409. and the momentum right now on the daily frame is in favor of sellers. So let's bring the vertical line on point C in the downward direction here and move to the next lower time frame, that is 4 hourly. So starting from the vertical line, I get to see bearish moves here. So bearish ABC. So this is the first A and this is the point B. I'm ignoring this one because the pullback is not very strong. I always recommend to pick the stronger levels here and the stronger pullbacks. So this gives me the ABC in the bearish direction, and I'm connecting one more time. So I need to shift the vertical line, zoom out and look for the magnet zones here. So currently we are very close to the support level, Fib extension 61.8 of the 4 hourly leg down. Let's differentiate with a different color. And if you zoom out, we need to find the magnets. And I can see Fib extension 1.618 of the 4 hourly leg is exactly overlapping with Fib extension 100 of the higher time frame leg. So 1.1409 is a very high probability. Now Euro USD bearish pattern would be invalidated if Euro USD crosses above this zone. So this is the magnet resistance. It is also your falling trend line level. So in case if I see a closure above 1.1694 or 1.1703, the bearish plan would be invalidated. Otherwise, any bounce towards the trend line will be taken as a selling opportunity. And the first target is 1557. The current price is 1595. And once it breaches 1557, the next target would be 1.1409. Since dollar is getting stronger, US dollar index is getting stronger, in the short run, Euro USD would be under bearish pressure. Now switching to 1 hourly, I'll quickly run through. It is still creating the sequence of lower highs and lower lows. So this is the bearish structure here. We can see some short-lived corrective bounces during the week, but any bounce towards 1694 will be taken as a selling opportunity, and I'm expecting continuation lower. The next instrument is US dollar Japanese yen, and one more time I'll switch to FX Labs. I'll select USDJPY here. I've chosen intraday first. So intraday USDJPY, the score is in favor of sellers, 69% probability. And I want to see higher time frame swing trading setup as well. Now the swing trading setup is in favor of buyers. So basically there's a contradiction. So here USDJPY is right now not a trending pair because higher time frame and lower time frame setups based on quantum analysis, they are not aligned in the same direction. So the trade quality or the trade setup would not be of very high grade. Now let's finalize, let's validate on the basis of charts. So I'll clean up the chart and I'll start from the monthly frame here. Now starting on the monthly frame, I'll start from the lowest point. So let's put the vertical line here. So this is the lowest point of the chart and I get to see the first bullish structure here. So first ABC identified. Let's use it. Let's connect point A, point B, and point C here. So I'm going to apply my first extension in the bullish direction. So first extension in the bullish direction applied, and we need to bring the vertical line to point C here. Now I can see the next bullish rally. It triggered from this level. So this is A, sorry. So we have A here. We have point B and we have point C here. So let's apply the next extension now. So second extension on the monthly frame applied in the bullish direction, and we need to shift the vertical line. And now it has already formed some magnet level. So this is a very strong magnet support level, followed by the next one. So basically the level between 149 to 151 is the strong support level now. And if I zoom out, I see the future magnet extension level is coming at 177. Now this would be long-term plan, and right now the momentum on the higher time frame is in favor of buyers. Now, do we have the next extension probability? Yes. So on the monthly frame, starting from the vertical line, we have A. This becomes your new B and new C point. So let's apply one more extension. So another extension on the monthly frame added, and we need to shift the vertical line to point C here. So after creating the new leg up, we got the corrective drop down with double bottom, and from the double bottom area, it starts its new leg up with the increase in the bullish momentum. So we can have a reverse calculation here. I will use fib retracement from the highest to the lowest here, and the current price level is exactly in between 78 to 85. So US dollar Japanese yen, though the structure is bullish, but the current price is inside the resistance zone, a very strong resistance zone. Now I'm switching to weekly here, and on the weekly frame I can see only if I talk about the last leg up on the weekly frame, I can see slowdown here, so loss of momentum. The divergence is not visible, but a short-term bearish drop is highly anticipated here because we are right now in the resistance zone based on the fib retracement level. Moving to daily chart. Now on the daily chart, I can see a probability of bearish divergence. So to cut it short, I'll bring my vertical line here on the daily chart, and I'll explain the structure here. So this is the A point, starting point, point B, and point C. Then I get to see the next high and the pullback point, higher high, and the pullback points in between. And between the last two highs, I can see that there is a probability of bearish divergence. Now, due to bearish divergence, which is probable, not yet completed, we can expect some short-term drop here. And do not forget, the upcoming week, we have BoJ announcement. So Bank of Japan interest rate policy announcement. So this is going to be highly volatile week for all Japanese yen pairs. So trade cautiously. And USDJPY, for the time being, could be under short-term selling pressure. So we need to trade cautiously. And secondly, there is no synchronization between the higher time frame pattern and the lower time frame quantum analysis. Now we can apply extension on the daily chart, a quick one. So I will use extension from the vertical line. I'll connect with the first high and first low. I'll quickly do the same thing. Start from the C point. I'll connect with the next high and next low here. And the last one, I'll start from point C, connect with this high and point C here. So I've covered until this point. So the local magnet support is at 154.81. Let's move to the 4-hourly frame. So on the 4-hourly frame, starting from the highlighted zone, so we have the first structure in the bullish direction, A, B, and C. And I do not see any signs against here. Again, it is creating a sequence of higher highs. So we expect continuation higher. But due to the fundamental announcement, this could be highly volatile week for JPY pairs. So starting from the lowest point on the highlighted area, this is the first move which brings the double bottom thing. So I can go directly to the second one. So this is the extension applied on the 4-hourly frame. We can shift the vertical line to the next leg. And now after the first move up, basically higher high sequence, this is a strong rally. We are under short-term corrective drop. Now this short-term corrective drop can be measured with the help of fib retracement on the last leg up. So I'll quickly run through. I'll bring the fib retracement tool here on the last leg up. And currently USDJPY is under the corrective drop. So unless USDJPY remains above 156.18, so this is the zone of invalidation now. So unless USDJPY holds the support of 78.85 zone, that is price level of 156.18, any drop would be taken as an invitation to buy. And the next target would be 159.96, or we can say 160. And the magnet extension is at 161.28 to 161.46. So I'll be buying the dips and I'll be holding my buy trades for the target of 161.46 unless this level is held as support. So this is the plan for USDJPY, and now everyone's favorite, gold. Now I'll not repeat the same script, so I'll start from the weekly frame. Monthly chart is extremely bullish. Weekly chart is again extremely bullish. I can see higher high sequence all across. I can see rising momentum all across, so no damage to the bullish pattern. I'm switching from line chart to candles chart, and I'm directly applying here the reverse fib retracement. So the reverse fib retracement will be applied on the drops. So I'll start from the highest point here. So this is the drop I'm taking into consideration now for reverse fib application, and I'm going to use fib retracement from the highest to the lowest shadow of the candle. So this is the highest shadow point and this is the lowest shadow point. Now you'll be surprised that the next leg up forms the base exactly in between the strongest fib level of 78 and 85. So this is the new base for gold. So gold rallied. So the new rally starts. So new rally starts from 3883. It crosses the resistance at 78 and 85. It drops exactly to the same level, retest this area as new support, and starts rising again. Now the next level in sight is, I need to zoom out. Now the next level in sight is 161.8. Now this serves as extension level. So basically the next target would be 4685, and we can switch to the lower time frame. So this area becomes our new support. So I'm adding a line here, vertical line, and we can switch to the daily frame now. Now on the daily frame, I'm going to apply the same technique one more time. So I'll be covering the fib retracement in the downward direction on the new drop here. So previously we have taken this leg. So this drop is already measured. Now I'm going to measure the next drop with the help of fib retracement in the reverse order. So let's do it. So I'm going to use fib retracement from the highest of the candle to the lowest shadow. And you'll be surprised that market extends one more time exactly to fib retracement 125. So 125 is right now acting as local resistance. So that's the reason I said after hitting 4621, now gold has entered into a dangerous area. Dangerous means it is hitting the resistance level now. And I'm expecting that the level of 78 to 85 would act as new support here. So this is going to be our new base. So let's highlight this area with green. So this green highlighted area, that is the price level between 4494 to 4513, should act as our local base, nearest support now. That's it. And we can apply fib extension also on the previous leg up. So I'm connecting read extension from the lowest, going to the next high and connecting with point C here. Now the fib extension shows the new target as 4686. The fib retracement shows the new target as 4661. So we are very close here. So it's kind of the magnet resistance. And now I'll be switching to 4 hourly chart. And I'll start the read from the vertical line itself. So starting from the vertical line, this is the lowest point. So this is our next leg, point A. This is point B. And this is to be taken as point C. So let's apply the next extension here to get the magnets of the extension lines done. And we can apply the vertical line here. Now it has created a new high. So this is the higher high sequence, and higher high sequence on MACD histogram. So after the short-term corrective drop, I'm expecting gold to continue higher. Now, if you notice, it has formed a magnet support around this area. So this is the zone of 4550. So in the current week, gold dropped precisely to this level and bounced up strongly. So we have the next leg now on the 4 hourly chart. So I'm gonna measure retracement on this leg now. So I will clean up the chart. I will remove the Fib retracements from the higher time frame, and I'm gonna apply retracement on the latest 4 hourly bullish leg up, starting from A to B here. Now currently gold is under short-term pressure, so it has not cleared the resistance between 14.5 to 23. So this is going to act as local resistance area. And unless it stays above 4443 to 4459, which is the level of 78 to 85 of the recent upward leg, the expectation is it will continue higher. So any drop within this range will be taken as an opportunity to buy. So first highlighted zone is around 4498. So this is most likely going to provide support. In case if this support fails, then the next drop towards 4443 will provide support, and we will expect continuation higher. And the target would be, the first target would be 4686. So this is the next target in sight. So 4637 already achieved in the current week. Above 4686, the next level would be 4779, followed by 4866. So this is the plan for the upcoming trading week. Now, before I end this video, there is an important message for my viewers. So basically, I have noticed that in the recent days, there are many scammers who have copied our brand mark, our basically identity. So they have created multiple Telegram channels. They are posting some profit videos here and screenshots, and they are asking for investment. So please stay away from the scammers. If you need to join our Telegram group, you can ask for the link, and we will invite you through our official invitation joining link only. Do not send money, do not transfer money to any of the imposters. They are just trying to copy our brand name, and they want to take your investments, and it could be a scam. And if you want the access for FX Labs Prime, my team would be happy to assist you. You just need to send your email to our registered email, that is help@moneytize.ae, and my team will grant access of free 90-day access to you. So take care, and this is a plan for coming week. If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.